It's really important to get started with the pre-approval process. We have to know how long do you plan on keeping this property. This is a long-term game. Real estate is a long-term game.
Welcome back. Today we have a special guest with us. I'll have you introduce yourself.
Hi everyone, I'm Yasmine Turco. I'm a senior loan officer. I help first-time homebuyers get into their first home and hopefully build generational wealth through real estate.
Generational wealth, that's the name of the game, right? So today we're here to talk to you all. We have a couple of questions for you today.
Okay.
Main question that I've been getting for quite some time now. Does it make sense to buy a home in this market? Does it make sense for you financially, right? So people are worried about high interest rates, which I understand, right? But at the end of the day, I always say, if you can't afford it, don't buy it, right? Yeah. So does it make sense in your opinion to buy right now?
I've been hearing this question a lot, and I think it's very important to reframe this question and ask, is it a good time for me to buy a house now? Simply now. You don't have to ask, whether this market is right or not. You just have to ask the question. At this moment in my life, in my financial situation, is it a good time for me to buy right now? It's very difficult to time the market, to buy when property values are low or when interest rates are low. Like, we don't have a crystal ball to really, know what's going to happen in the future and whether this is the best time in real estate. But we know that real estate is how a lot of people in this country got wealthy, right?
Yes,
and
absolutely.
How generational wealth is built. So just like you said, the question to ask is does it make sense for me financially right now?
Right. So besides high interest rates, what would you say is the most common barrier that buyers are facing with getting a pre-approval right now?
I would say the number one barrier has always been down payment.
Down payment.
Down payment. If I were to list the number two barrier, it would be credit. But luckily, there's a lot of programs right now available for down payment assistance. And then when it comes to credit, that's why it's really important to get started with the pre-approval process way before you decide to buy a home, right? Way before your lease is about to expire, right?
Yes.
So you have to get started with the process ahead of time to uncover any issues that you may have with credit. And obviously your loan officer is going to help you fix anything that's showing on your credit.
So properly preparing yourself ahead of time, I think that helps with people with getting pre-approved, right? Because if you're going through their credit score, you could see exactly what pain points they are going through, right?
Yeah.
That they could properly prepare themselves, fix those items, and then maybe if they need to wait a couple months to get that pre-approval, they'll be fully prepared at that point in time, right? So does that make sense?
Yeah, no, it makes total sense. And then going back to the down payment piece, a lot of people get discouraged, right? They think, I don't have anything saved, or it's going to be so hard for me to save in the future. I think, the best thing you could do is just take the first step. Talk to a professional. Talk to your favorite realtor. Talk to your favorite loan officer. And just bring up the issues that you're facing. There's a lot of solutions available for down payment. Maybe you can get a gift of equity if you're, buying a house from a family member.
Yes.
Maybe you can get a gift from a family member and then you can, repay them on the side.
Can we briefly talk about the gift of equity? I love that you brought that up.
Yes.
So the gift of equity, how does that help? Okay, so for example, let's say somebody wants to purchase a home from a family member, a multifamily home, but they don't have the down payment funds ready, right?
Yeah.
What ways can a gift of equity help them?
I think it's an incredible opportunity. So if you have, a property that's available that belongs to your grandmother is willing to give it to you. A gift of equity is basically a small portion of the equity of that home being gifted to you from that family member. So you don't feel the money, you don't touch it, right? It's just built in your mortgage application, but basically you won't have to spend anything out of pocket, right? So let's say you're a first-time home buyer, you only technically need 3% for a down payment. So your family member can be gifting you 3% of that equity that will go towards your down payment, and they can maybe gift you a little bit more that can go towards closing costs.
So I was going to ask you about that closing cost. So down payment, I feel like a lot of people always prepare themselves for the down payment, right? That's the biggest expense, but we still have to keep in mind closing costs. So that definitely helps. And even if you're not doing a gift of equity for your closing costs, seller concessions definitely help with closing costs in general, right? So especially in this market right now, I feel like there's less competition when it comes to that. So you can definitely ask the seller to help provide closing costs towards your purchase, right? So that definitely helps with buyers right now who are worried about down payment and their closing costs. What's your
Absolutely.
take on that in terms of negotiating that into pretty much the purchase and sales for?
I think it's a great idea, to try and negotiate that. There's this little tactic that I've been seeing a lot of agents use lately
Give us the
is
scoop.
basically increasing the purchase price, right? And using that increase as a seller credit towards closing costs or maybe towards paying down the interest rate.
That's a gem.
Yeah,
Okay.
so instead of just, keeping the purchase price, let's say it's $400,000 single family home. Instead of making it 400K and then, just go with that purchase price, you can increase the purchase price to like, let's say 405, right? So that you can finance a bigger loan amount and the seller, are willing to give to you a seller credit because you've increased.
And they're still walking away what they wanted to walk away.
Exactly. So yeah, you're basically, the seller is still getting their money.
Yep.
It's financed by the lender and you get your closing cost credit to help you with those fees.
Exactly. So us agents have to definitely keep in mind is it needs to meet the appraisal, right?
Yes.
So just like you had mentioned, so let's say it's $400,000. You see a lot of people at the open house, that's going to go well above the $400,000. You need, let's say, $10,000 in credit and closing credit, right?
Yeah.
So I would say just to make it sweet for the seller, just to get your foot through the door, let's say $415, so that you have an extra $5 for that seller. At the end of the day, if it appraises at the $415, we're good to go.
Yeah.
You have your closing costs wrapped into your mortgage. You have less payment that you have to bring to the closing table. You just bring down your down payment realistically. So it definitely helps in that situation. I think a lot of buyers can definitely take advantage of that, especially if they're scared with these times right now. If you can get your closing costs covered, why not? Right? So
I want to add something, just a little tip, right? If you're looking to buy a home right now, I always suggest to go look up the town's website. So let's say you're buying in Stoughton, right?
Okay.
Google Stoughton town website. You're gonna get into the official website. Some towns have grant programs towards first-time home buyers. You obviously have to apply separately. It has nothing to do with your chosen lender. But top of my head, I can tell you that the city of Lynn, city of Worcester, for example, they have grant programs. They'll give you like $10,000, $15,000.
And that goes towards your closing costs,
Towards your closing costs, down payment. You won't have access to the money until the day of closing. They'll just cut you a check. You'll give directly to your lender. But it's a sweet little, perk that not a lot of people try to take advantage of.
Get your foot through the door. So if it's not a right time to buy right now, you have all these grants being applied for you. Definitely take advantage of these things because getting your foot through the door with real estate is always going to be a gem, right? So people are worried about the interest rates. I get it. But at the end of the day, we've seen much higher interest rates. I feel that we've been stuck into being used to the 2%, 3%, but that's not coming back anytime soon. So if we're touching 8% right now, you're worried about that. Get your foot through the door. Like we mentioned before, you could always refinance. Let's talk about that.
Refinance. Yeah.
So the term that I'm hearing a lot lately is marry the house, date the rate. What's your take on that?
It's only valid in certain situations, right? Yeah, marry the house, date the rate. First question that comes to mind is how long do you plan on keeping this house, right? Marrying the house, maybe your plan is only to keep this house for 3-4 years and then you have projects of moving out of state or anything like that. But dating the rate, that's easy to say, but can you actually afford dating that rate?
Right. Dates are expensive, right? So, for me, I say that all the time, right? You can always refinance down the line. As your home appreciates, you're going to be able to refinance to a lower rate. You're good because rates are going to fall at some point, right? But I need people to keep in mind that you still need to be in a position where you qualify to refinance. Can we speak a little bit on that in terms of your debt to income having to be in line, your credit score and all that having to be in line in order to refinance?
Yeah, absolutely. So a refinance, it's exactly the same thing as applying for a mortgage for purchase. The same process. We have to collect your information. We have to pull credit. You have to have a qualifying credit score. You have to have a qualifying debt to income ratio. You need to be in good standing financially for you to refinance. So you can't just buy a home and then, quit your job or neglect your credit. You still have to be in good standing because it's the same process. Refinances, they can make sense if we crunch the numbers up front and make sure that it's actually advantageous for you to refinance because the refinance comes with closing costs too. It's not free, right? Closing costs on a refinance, I would say it's typically 2% of the loan amount compared to 3% of the loan amount for a purchase. So slightly, cheaper, but it's still a cost that you're going to add into the loan amount. So we have to calculate your break-even point, right? We have to know how long do you plan on keeping this property? Does it make sense for you to pay a sum of money up front to get a lower monthly payment in the future, right? So it's a great option.
It has to make sense.
Everything has to make sense.
Right. Okay. So, and I bring that up, and I bring the DTI up because I noticed that typically if somebody purchases a home, right, you're going to have some work to do in the home. You have furniture to buy, you have some TLC to do, and sometimes if you drop the huge down payment, you drop money on your closing costs, you're kind of low on funds, right? So people get into putting things on credit, which is going to affect your DTI. So I definitely want everyone to keep that in mind and not solely focus on just refinancing because it has to make sense. And I'm just going to always reiterate that it needs to make sense for you to be successful with your home ownership goals.
Yeah, we always have to crunch numbers, and even when you go to buy that first home, you really need to be working with a professional, with a loan officer who's going to look at the big picture of your finances, right? Because it's easy to just, get numbers for the down payment and say, hey, you qualify, go buy this home. But you really want to work with someone who's going to ask you about your monthly expenses, your monthly budget, give you homework to do, right? Like you got to find out what's a comfortable housing expense for you every month while maintaining your lifestyle. Like you still want to go on vacation, you still want to go out to eat, right? You don't want to be a house
saving for a home. That's risky.
And we go back again to, you got to find out whether it makes sense for you to buy right now or not. Right. The 2% and 3% rates, those were abnormal rates. That was not the norm.
That wasn't. And for those who took advantage of that, congratulations. There were a lot of people that were waiting on the side like, nah, it's going to go lower. But they're still waiting. So what do you say to the people that are still waiting to purchase a home that, okay, the rates are 7-8%. It's way too high. I don't want to purchase a home right now, but I need to move from where I'm at.
What I would say is ask your grandmother or your dad when they bought their home, how much they bought their home for, and what is it worth right now.
I love that.
Right? I can tell you that, well, my parents are not from here, but my in-laws bought a home in Medford in the 90s for like $100,000, two-family home, and it's now worth $1 million. So in the future, you're going to be that older person, and your grandkids are going to look back to you and ask, hey, when, you buy your home in when? 2023?
And that number's going to sound crazy to them.
It's going to sound crazy to them. You're going to say, I bought it for $500,000. Maybe that home would be $2 million then, right?
Yes. Generational wealth right there.
Perspective.
I love that. So we have a couple questions for you, right? So we had somebody ask, should I wait for interest rates to fall before getting into the process of getting a pre-approval?
Okay, good question. Getting into the pre-approval process, you never want to get into it, a month before you need a home, right? You always want to give yourself some time. I always suggest at least 6 months.
Okay.
What do you think of that time frame?
6 months makes sense. There's no better time than now, right? So if let's say you're in a lease right now and your lease ends in July, whatever the case is, I'm starting right now to see what I may need to fix on my credit, to see where I may be at in terms of my numbers and all that, so that by that time that July comes, I'm already in my new home, not worrying about starting the pre-approval process.
There you go. And with interest rates expected to decrease next year, maybe end of 2024, let's say, but nobody knows, right?
If we had the crystal ball, I would definitely tell y'all, but sorry.
But what we do know is that the second those rates go down, a lot of people on the sideline, just like you probably, right, are going to come out of the woodwork and are going to start aggressively looking for homes, right? So we know that it's going to be a lot more competitive than it is right now.
Super competitive.
And you don't want to get into that, like, just chaos and try to figure out your finances. Maybe uncover that you have issues with your credit that you need to fix now. The rates are low and the house has, 20 offers. Like, it's just going to be very, very stressful. So even if you don't feel comfortable buying a home right now with these current rates and you're just waiting for rates to go down, at least be smart about it and be prepared, right? Get your finances ready, get your ducks in a row so that the second you see a 6% rate or a 5% rate, you're ready to go.
So now that you mentioned a 6% or 5% rate, right?
Yeah.
So at what point in time, let's say somebody locks in their loan today at 8%, at what point in time should they consider refinancing at a lower rate? Once it hits 7.5, 7?
Yeah, I would say if there's a decrease of 0.5%.
Okay.
You should start considering it and just give it a call to your loan officer because there's a lot that goes into a refinance. Maybe you can drop the PMI. That can help your rate, your monthly payment. Even if you drop your rate by just, 0.5%, but you're able to drop your PMI, that's huge. That can be huge on the monthly payment. Yeah, I would say best practice, 0.5%. Give a call to your loan officer. Yeah, minimum, yeah.
All right, so we have another question.